Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. It was here on this contract 4 weeks ago that I first saw what in hindsight was a fairly obvious April to mid-June head and shoulders pattern, with a neckline that had been just below most of the very recent action. That's currently at 1168. The primary target was reached by the end of June as the market hesitated in the pretty heavy duty congestion zone between 1001 and 957. However, the hesitation was not appropriate in size compared to what I thought it deserved, and soon enough prices punched down through it 2 weeks ago, extending the move lower and reaching target X1 in the harder to reach secondary target for the head and shoulders top in the 862 area. Now, the subsequent reaction back up was somewhat unexpected, and I can only really put it down to the congestion between A55 and A81, which contains the 50% Fibonacci line of the September 2019 to May 2022 move at 881, having some unusual supportive elements after the market broke down through the 1001-957 congestion zone and the flatlining long moving average, currently 952. This past Monday, after changing, the market opened higher within that congestion area overhead, but pretty soon dropped back down through the long moving average and the fairly free area down to the 50% Fibonacci line of the August 2020 to May 2021 move at 900 even. Yet it was only the 855 to 881 congestion area that really slowed prices midweek, but not enough to stop a full test down today of last week's lows and exceed it, if by a little. Now, this has set up the conditions for this week here to be a weekly key reversal down. So if we close tonight below 913, which looks likely, then we'd be on, and that gives this market all sorts of possibilities. You see, we could regard the action since the middle of June as a possible bear flag action. If this happens, then we would have a possible target X in the 691 area. That would be a big step, as we've had a lot of congestion on the way down there from late last year between 855 and 748. Let's watch and see how it develops. Minneapolis wheat. Okay, so I said this now 4 weeks ago, and I quoted and started my weekly commentary thus. Here I quote: I've previously seen in Kansas City wheat, though not so clear in Chicago wheat, a big head and shoulders pattern formed since about mid-April. Minneapolis wheat is similar. The differences here are not as pronounced as you would think, but we do have some differences. For example, the left shoulder is split and the right shoulder is diminutive. Nevertheless, I've drawn a neckline, that's currently at 1241, which is closely allied right now to the rising short medium moving average. This neckline has been tested since this past Wednesday, so that's some while ago, and today, and that is Wednesday and Friday from 4 weeks ago. I continue quoting: we have started to punch down through it. This is just the very first day, so it by no means confirmed. And also, please remember, though head and shoulders patterns are usually seen as bearish reversal topping actions, and that would fit in with this scenario, they can also be bullish continuation patterns. However, that all being said, I feel obliged to set out prospective primary target X in the 1089 area and a secondary and harder to get target X1 in the 973 area. These are big asks of the market, as the first one, target X, would see the market on the very edge of the current market driver, the April 21 to January 22 bullish Andrews pitchfork, and target X1 would see the market clean off of it. End of quote. First off, that bullish Andrews pitchfork is retired. So, that was the last time I referred to that commentary as target X, target X2, and even target X1, the harder to reach secondary target head and shoulders top pattern. Well, they've all been reached. It's left the market open for what we saw since that commentary, a drop down, all the way down to the 2022 lower 871. Last week, that drop caused a 3-day bullish pattern to form, a bullish morning star pattern. And that saw a follow through higher this week up to the rapidly declining short moving average, currently at 985, and almost as high as the flatlining long moving average, currently 1054. However, the bullish incentive here rapidly expired with Monday's bearish dark cloud cover pattern, and we're back here traveling down to the lows of last week. Now, there is no weekly key reversal down in prospect here just yet, as there is in the Kansas City contract, but there is enough bearish incentive for two things to possibly happen. Firstly, for a test down to the recently formed 2022 lower 870, which is not such a big ask. Secondly, if the first scenario happens, then we could look at the mid-June to date action, possibly forming a bear flag type action. Now, it's too early to start looking at targets below for this, but it's time to start considering this, should it happen. Otherwise, if it doesn't, we may have a possible but weak-looking double bottom pattern. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.